Ladies, welcome to both of you on this big jobs report. Michelle, do you agree that perversely the better news on the economy and the jobs sets us up for a harder landing, a worse recession potentially, because the Fed will have to do more tightening?
Well, I think it shows that there's more fundamental strength in the economy. And if people are still seeing this type of job growth, they're still getting that type of income in, they're still out there spending, which means in order to properly cool down that demand side of the economy and take out that inflationary pressure, it means the Fed really might have to do more, as a lot of those forecasts would suggest. Does it mean that there'll be a hard landing per se? No, I don't know if that's the fair conclusion. I still think it's this balancing act that the Fed has to do in terms of cooling the economy just enough to reduce inflation without pushing it into that downturn. But clearly, there's just a lot more momentum, a lot more growth, particularly from the labor market, than many people gave credit to.
Karen, does it jibe with your data at LinkedIn? And how do you square this kind of strength at this point in the cycle with negative GDP growth?
Yeah, well, look, the way we're looking at it is it's not a recession when you add 500,000 jobs to the economy. Our data shows that hiring is holding in. It is still a solid labor market. Do we think there are mixed signals? I do. I will tell you. I think right now there's no question that employers are still hiring, but we're starting to see less breadth across the hiring and less momentum. So for me, what I would tell the Fed is I'm starting to see a little bit of rebalancing maybe between supply and demand in the labor market, starting to see job seekers looking for jobs with more intensity. They're coming back to the platform. We're starting to see also employers, think about, do they really want to add that next job opening, or do they want to hold back on that? And so we're seeing, still elevated job postings and openings, but not as much as before. And at the same time, we're seeing more people more actively searching for jobs.
Well, I'm curious about that last point, because we saw the labor force participation rate actually go down, which was, if you had to find a negative in this report, Karen, I guess that was it.
That was it. Absolutely. But I'll tell you what happens with our data is that it's real time. And so we're seeing this as like just the latest, most up to date signs of like what I think are indications of a labor market rebalancing. But overall, I'm not expecting that we're going to see labor force participation rates or employment population ratios go back up to where they were pre-pandemic. But what we do still see is that hiring is around the pre-pandemic trend. Even if it's slowing, employers are still hiring, people are still looking. I think it's going to be a fairly solid labor market for a while. You're going to see some quiet rebalancing. And then eventually, I do think we are going to see a little bit of a tougher time towards the end of the year or earlier next year.